Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steve Gallucci, Deloitte's North America leader of the CFO program, to discuss the third quarter Deloitte CFO Signals survey, which provides a comprehensive pulse of top financial executives' economic outlook, including their assessment of the economy and markets, financial prospects, and growth for their own company and forward-looking strategy. Due to the immense strain the pandemic has placed on supply chain, this quarter's survey also takes a deep dive into CFOs' plans to revamp their supply chain over the coming years. Steve, we have a lot to unpack here. Welcome back to Trade Talks, and remind the audience what this survey is all about.
Sure, it's great to be here, Jill. Well, our survey is, and I think you alluded to it, it's what we consider to be the pulse check for what North America's largest company CFOs are thinking about. To give some context to that, we typically get between 100 and 150 respondents. Most of those companies, I'd say 75%, represent companies of $1 billion plus. 25%, 1 in 4, represent at least companies that are $10 billion plus. From a market cap perspective, it covers about $4.3 trillion in market cap. So we think it's a great data set for CFOs to use with their stakeholders.
Let's start with economic optimism and how CFOs regard the current and future status of the North American, European, and Chinese economies.
Yeah, it's a great question. It's one that we look into in each quarter. The CFOs continue to be bullish about both North America and Europe today, less so about China today. However, when we compare how CFOs rated out those economies in a year from now, in the second quarter versus the third quarter, there clearly was some pullback, less optimism, both in the overall economy and their expectations around revenue growth, earnings growth, dividends, and CapEx. Conversely, CFOs do see an increase in both domestic hiring and related wages. From a risk perspective, talent is really the top topic on everybody's mind. Return to work, the great resignation, call it what you want. CFOs are concerned about talent and labor, workforce shortages, and many other related topics to that.
How about M&A plans? What percentage of growth in the next 3 years is expected to come from M&A? And what are the biggest challenges to delivering a deal?
Sure. Pretty significant number of CFOs responded that they see M&A as a major part of their growth plans. At least half said it's going to be between 0 and 10% of their growth over the next couple of years. And 26%, 1 in 4, said anywhere between 11 and 20%. From a challenge perspective, valuing assets and getting financing, certainly some of the bigger challenges, and also to how to integrate a deal, and more broadly, how to translate a business strategy into an effective M&A strategy. From a focus perspective, companies are doing deals for a variety of reasons. The three of which that were identified are competitive positioning, trying to seek inorganic growth, and whether or not acquisitions are the fit and the price are favorable.
And to wrap up here, supply chains, of course, is top of mind. Disruptions are being felt across the board. What concerns the CFOs the most, and how will supply chain change within the next 3 years?
Yeah, you're spot on. 44% said costs have increased 5% or more. 32%, about a third, have already seen their sales suffer from supply chain challenges. Concerns, the top three that CFOs identified are cyber, operation, and geopolitical risk. And then from a perspective of diversification over the next 3 years, it's very, very clear. There will be more diversification. 70% said they will seek to diversify their supply chain. And it's really a shift from more in North America, less in China.
All right, Steve, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.